Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Woohoo! Party! Just want to make sure YouTube's running. And hello, everyone. Well, yay, that's good. All right. Anyway, hello, everybody. Welcome back to the Frivolity. Welcome to 2020, eh? Holy Jesus, this is going to be a crazy year. You know, part of me actually, after the crypto top in 2017, 2018, part of me actually just wanted to retire. Just say, that's it, I'm done. Call me back in 2022, 2023, and we'll do it all over again. If anything, what you're seeing on the screen here, this is a hallmark of the end of business cycles, the end of long bull runs, and economic expansions, blah, blah, blah. Usually it goes into chaos at the end of these moves. And I got to say, 2020 itself is going to be a lot of this. And in a weird sort of way, it's actually very similar to sort of like 1929. In March of 1929, stock market broke, and there was this university professor running around. His name was Babson, saying stock market's going to crash, don't invest into it, and they called it the Babson break. And then about the middle of March, right after the Ides of March, the whole damn market pivoted and went screaming up to new highs, which I fully expect. So again, you know, it's interesting, 1929 similarities. I would get a little bit cautionary about getting too bearish in the face of these meltdowns here in the major indexes. In the short term, interestingly enough, I think you can actually make the argument that if you look at, a lot of stocks that we're interested in at TRI, I mean, bear. What bear? I don't see a bear here. And interestingly enough, if you can actually find names and things like this is a pharmaceutical stock, a lot of the pharma names, they don't even give a crap about broader economy. They're, this guy here, he happens to be rallying on opioid news. But, if we look at just something like an Amazon, everybody should look at this chart and go, well, you'd be an idiot to be a buyer up here. What are you doing buying up here? I mean, look how far the darn thing has run. This is kind of like going and buying gold after the huge move that it's had here recently. And just expecting it to continue higher and not being cognizant of the fact that actually this is an extremely dangerous, risky market. And, the irony of all of this is all they're doing is they're just backing this thing up into appropriate technical levels, into W's, blah, blah, blah. You've heard the story a million times before. And then once that's done, and of course, NASDAQ, Dow, they're off huge chunks, right? Ironically enough, from a percentage term, it's not even really that big of a move. But, if you were interested in a stock like Amazon, well, you got to concentrate down here, when we get down into these lows. So, but you guys already know the story. The point of the matter here is this is what 2020 is going to look like. And believe it or not, I don't think we're done on the upside. Having said that, we are, of course, concentrated on the near term for these little daily free offerings. And I'm just going to tell you what I'm doing in the market. I might make money, I might not, but we'll see what happens. U.S. dollar index, we always like to start off with this. I'm getting the feeling, like I said, we had little algo day, sort of swing trader signals come in on things like the euro there. I don't know whether I showed you guys this on YouTube or not, but algo's feeling bullish on euro, and interestingly enough, if this thing's actually moving up, this is technically a risk-on bet. So that, in a way, is sort of a little cautionary word that, hey, you know what, maybe the stock market weakness is a little bit exaggerated here. If everything was going to hell in a handbasket and it was the end of the world, this thing would not be moving up. So, take it for whatever it's worth. It's just interesting to see that these rallies are happening. I was also actually a little surprised here this morning you see that the gold stocks are kind of stalling out here. Especially this gold and silver index. You can see, the big boys, Barrick and Newmont, they just all gone absolutely crazy to the upside. They've already surpassed technical objectives. RSI, RSI sitting in there at 83.6. How often does RSI get to 83.6 on Newmont? And what usually happens following RSI 83.6 readings? You just do the research yourself. You understand the message. I am still long the gold, but, as I'd said, I did take partial profits yesterday. If this is it and the gold market is done, we have to go into correction mode, I'll just walk away from the rest of it. I made some good money on this trade, so I'm fine. If however, there is still more in the tank, well, I'll let them have some more up top here. We'll see what happens. My hunch is this feels like very blow-off toppy. The problem here, though, is it's extremely dangerous to call tops and call bottoms in the face of these kind of markets because you don't know what's going to happen. I spent a lot of time in the daily brief today. In fact, actually, we did an extra long one. We had actually a really cool report from one of our Aussies today, about a 10-15 minute report, the Down Under report, we call it. And John gave us some really cool stuff to think about here today. But, like on gold right now, as you can kind of see, and actually really I don't know whether I want to go into too much detail on this, but I am thinking, 38.2 retracements. Where the hell did that go? Maybe it was off a different chart. That's weird. You can even see I had the box right on there. Anyway, this did have 38.2s on it, so I'm not quite sure what I did with them. This was a 38.2 test. Oh, there it is. It's because I have the reload zones on. 38.2. There we are. So you can see, now we actually find out whether this thing's actually a bull or whether it's a bear. Now, we could do either one or two things. As you can see, I've sort of illustrated what a bear failure would look like. And, like I had on there a moment ago, reload zones down in here. I like that as a buying window for gold. But, the damn market will do any old thing it wants. We could very easily do something along these lines, right? Good old set up another buy. Point of the matter here is we've got to let this thing calm down here a little bit. So that's sort of been the general message from me today about the gold. And as I said, I did take a bit of profits there yesterday. So US dollar correcting after nutso move up. Still think we could go higher. Higher highs and higher lows defines a bull. This was a pretty important gap level. I'm kind of thinking that the euro and the yen have to sort of clean up their insano face rip down moves. Get the market a little not as oversold as it was. Clean that up a little bit. You can see yen's doing 50% bounces kind of idea. I think I showed you that yesterday. So I guess what I'm feeling, and actually it's interesting because we also looked at the yield curve. Keep in mind, 30-year yields are still higher than short-term yields, so technically we're not inverted, so that's why we haven't gotten the big sort of inverted yield curve warnings here yet. The shorter end of the curve is inverted, but the longer end still has some room here. I have hearing a lot of people yammering and squawking about they want the Fed to cut rates to clean all this up. But anyway you shake it, let's call a spade a spade. Interest rates are falling, which by definition is deflationary. Our tip TLT spread is validating that deflationary thesis. So really, I could actually make the argument the Fed could cut rates here. They wouldn't be out of the sort of realm of realistic. If the stock market continues to break the way that it is, we might even find that the Fed comes out and says, all right, enough's enough. Here's a quarter point cut. You never know. But we'll see what happens. So in the short term, fear is dominating. Risk off is getting well bid up. Interesting how the gold, though, is not moving higher. U.S. stocks, they're getting their ass kicked. And if anything, this is also a really great analogy. In the level 1 course, we teach about correlating assets. You can use the efficient frontier to hedge your portfolio. In essence, you buy equal amount of stock and an equal amount of bond, and technically this is a zero-sum gain on a day like this. So what I will say, especially if I think the gold is getting maybe a little overdone to the upside here, I do like the idea of forcing myself to step in and pick up some oil here. The seasonal trade, buy in the middle of February, sell the middle of May. You made money 9 out of the past 10 years, blah, blah, blah. You can see how we talked about double bottoms here. I wanted to see a W on the other side of that. We now haven't gotten that W yet, so don't make any mistake. We're still not trending up technically. But I do like the idea that we're basically working our way right back down to the bottom end of this range. I think I told you yesterday that I was interested in being on the sell side in the gold, of which I did sell some. And I would be interested in being on the buy side in oil, which I did go and buy some of this Halliburton today. So, call me crazy, but I'm just stepping in against the bottom end range. I'll risk to the bottom end of range. Basically, I'm using this key reversal and this double bottom as my thesis. And of course, that happens to line up really nicely with reload zones. So, wish me luck. I went and bought some oil stock here today. Woohoo! Call me crazy. Heading on over to crypto, and no doubt about it. I mean, stocks in themselves, most of the stocks are red. But the irony of it all is actually a lot of our names, because we buy value, by the bottom end of the range, they're not really breaking down here today. They're just kind of going sideways. And even some of the oil names, that Tusk that I bought recently, REI, which I bought recently, they're all just sort of sitting there in reload zones, which is fascinating. So heading on over to crypto, I will say that I actually put a tweet out earlier today because really, I got to say, this has been a really handy, just simple roadmap for the public to follow. And I got to say, man, talk about owning a market. This is ridiculous. We just broke to new lows. Remember, I am short off the top. This was a fairly, I'm not going to say it was easy, but as a trader, you just get to the point where you're kind of like, this just feels like a level you should be short from. So maybe I was a bit fortunate. I don't know. My model has me short and just staying short. If these lows from, I guess about a week ago had held and we had moved up through these highs, then that would have been an indication that, yeah, probably the short is done. Best to walk away. The fact that we broke into new lows here this morning, just by a smidge, but nonetheless, we did break to new lows, means that really there's no hurry to get off of these shorts. So just going to let it work. Do see a notch here on the profile, and this is going to be asking, do we really want to accept back into value? If we do accept back into value, I hope all of you are aware that 80% of the time, if we accept back into value, we should trade back down to value low. I thought it was also interesting, too. This is going to really freak out the public here today. If we look at this range and start thinking about chaos levels, I find it fascinating that, oh, hello, chaos level says that we're going to come down and wash these lows. So, just be prepared, everybody. Interesting. I don't know whether I can really subscribe to that kind of thinking. That is pretty dramatic. I do like the idea of just simple 50% retracements back down into reload zones, test uptrend lines off of the bottom. Maybe we have to crap out here. That would suck, but nonetheless, I think I'm just going to sit short and just be short and really just not do anything here. Also, too, we, on the weekend broiler chicken show, we did sort of talk a little bit about how the three of them were looking a little heavy up top here. Bitcoin's now gone and M'd out again. Ethereum is threatening to break down. Now you can see we could potentially be losing 13 EMA here. And Litecoin, oh God, I was so worried about this. And sure enough, boo-boo, boo-boo, doosh, down we go. We'll see how we do. You can actually see the daily moving average relationships on Bitcoin and Litecoin are threatening to roll over bear here. The Ethereum one's still a bit far away. So, I don't know whether Ethereum's ready to break here. We might find that Litecoin and Bitcoin lead the way and Ethereum is dragged lower. But I've talked recently about how of the three, and in the crypto space, who's got sort of the inertia right now, it is like Ethereum sort of names. But at the same time, too, of course, I can't be a buyer here. Remember, this was a big chaos level. This was Mountain Man level, right? So it doesn't surprise me if somebody wanted to be short here. There's your picture. I'm not going to sugarcoat it. That's not an overly bullish picture. I'll just sort of finish off today, if you do trade alts, it's a really simple tool to keep on your screen. John in his report looked at just the regular shit index. I like to watch the leverage products because I think they move a little bit more exaggerated. It's interesting to see that the shit index is just back to its 38.2, but the bullshit, which is like 3 times the leverage, I think, on this thing, it's all the way back at 78.6s. And anyway, you shake it. There's no W's here, so there's really no hurry to do anything. I got a feeling, this highly leveraged shit index probably got to come all the way right back down to the original double bottom, fill in all these gaps. I like, you want to keep an eye on a level. This is, I think it says 823 there. Let's see how close we can get to that 823 level. 823.5. So somewhere in here, and again, I think this is going to take a good few weeks to develop. Also, too, I thought this was really cool. I don't know. I think I have it over here. Here. I thought this was fascinating because I've been, January barometer was saying that the stock market was going to be weak into the Ides of March. And I did a study of Bitcoin's rally, 342 4-hour bars. So we're going to break that in half, 171. And gee whiz, that lines up Mr. Gann, 50% move in 50% of the time, right around that Ides of March time period. So believe it or not, I'm actually thinking something along these lines are here for Bitcoin. We'll see what happens. Only time will tell. But I definitely think probably by the middle of March, we have a date with 8,500 on Bitcoin. I'm a super fan of course, buying markets that are out of favor, buying against lows. Oh, FYI, everybody, Kavarkanator knocked the cover off the ball, son of a bitch. He said he got a double off yesterday on this algo ran right up at the top end of the range. Way to go, Slick. I'm trading this versus Bitcoin, not versus USD. He was trading it versus USD. I suppose it's more than a double versus USD. I'm just doing it Bitcoin related, so my order's up top here. But just want to give him a big shout out. Way to go, Slick. And of course, we have no business being a buyer up here. That's just crazy. So, nice profit booked, and my hunch is, kind of like I've told you before, this guy loves to trade circles around me. My hunch is he was buying here, selling here, buying here, selling here, and he's going to be back buying here again. So, and again, the great part about what I do at TRI is that I've been doing this forever. I know the basic general rules, but what I love is actually after I train these people up, they actually become better traders than I am, which is awesome. That's exactly why I'm doing this. I want to make you all famous. So I want to see everybody in the comments of this video that are watching it today, because I know there's a few hundred of you that watch this. I want you to give props to Kevin because he's done really good work. He's really applied himself, and he deserves a big shout out. So I went to see those public comments shouting out, Kevin, you are awesome. And, we have a TRI SOF meeting tonight, which means we're going to sit in there, talk stock, and, maybe we'll even talk crypto options. And who knows, we might have a new idea out of him tonight to chew on. You never know. Anyway, point that I'm trying to make here is there are some names that I actually want to either, add a bit more to my portfolio down at the bottom end of the ranges, or even new positions because I really want a piece of this coin. So in a weird sort of way, I think I told you that VIA recently, the same sort of thing. I'm actually rooting for a crypto wipeout here because I want to buy this thing down here. And the only way we're going to get prices to come down is if all of you in the public start selling and get panicky. So bring on the bear. I still think this kind of market pullbacks are buying opportunities. And oh, by the way, yeah, I'm buying. So kind of like that Halliburton, just going to come in against the bottom end of the range, see if I can pick up some cheap stock. In this case, some cheap meta. And actually, I want to go real estate shopping. Virtual real estate. All right, I think I'll leave the free video at that. Hope you got something to chew on here today. Where's the screen we like here? FYI, here's an example of one. Hopefully everybody can see the W. Start zooming up. Worked my bids against the bottom end of the range, and I got filled overnight. So, it's a good example of a little one that I did a little nibble on as well. So, all right, I think I'll leave the video at that. Sure hope you got some value out of it. Way to go, Julian, shorting the shit out of the stock market, owning the gold market. Way to go, Kevin, owning the crypto market. Way to go, TRI, demonstrating best practices. And just having a lot of fun running our small businesses of trading. All right, everybody, all the best, and bye for now.